Okay, guys, let's get right into the stock market technical analysis. We've got the Fed out of the way, so just going to go through the charts. We'll see if there's anything out there or if we're getting any indication of where the market might want to head next post FOMC meeting. So we'll start off with triple Qs. Obviously, pretty much the entire rally this year has mostly been due to the 5-6 FANG stocks. So, and that's really highlighted here in the triple Qs. Microsoft and Apple make up a huge chunk of triple Qs, and then obviously you've got Nvidia, Amazon, Google, and yeah, that's most of them, the big ones at least. And so we're going to want to watch those. Triple Qs on the daily chart, you're rallying into a former zone of resistance, which is basically, you can see it all the way back here. It's about 369.70 or so. That we had on the daily chart, two initial rejections, one right there and one right there. So I would expect we're probably going to get a reaction here, some sort of a pullback, because if you can zoom in on where we're at right now, the triple Qs has pretty much gone parabolic into this resistance zone. Now that can continue. I mean, there's no sell signal right now on triple Qs, so it can continue to go parabolic. It can just keep going like that. It's just not very probable. Okay, so the likelihood that it keeps doing that is just not very likely. So into resistance, parabolic move. The divergences, they're getting really stretched. You can see here on the PPO, we still have the divergence. Again, not confirmed. I was talking about looking for that bearish PPO crossover right there. Never got it. It looked like it was starting to turn down, and then it just turned right back up and still pointed back up. So no bearish PPO crossover to help confirm the divergences. So you need to see that. That's going to be important to, you're going to want to see the PPO and everything start to turn down really soon in order to confirm those divergences. Otherwise, you keep going up, you're going to burn through the divergences. If that happens, obviously we'll have to take a look at where things are at. If you're a bull, you're coming into major resistance. So, if you are a bull, I think it makes sense to buy at support, which is down here. Okay, this is your trend line. I could see a pullback down to that trend line. Looks like there's some support, maybe right about 346.70 or something like that. You might come into that trend line around that range. That would be support. So that's where it would make sense if you're a bull to be a buyer. Definitely doesn't make sense to be a buyer up here rallying into resistance like this. NASDAQ futures, this is the hourly chart. This morning on the futures, we had a break. We had a bearish rising wedge on the hourly chart. This is just an hourly chart, so pretty short-term stuff. And that came with negative divergence. You did break down and you started to backtest, but they just rallied it right back into the wedge. A little bit of post FOMC noise going on. You got to kind of let the dust settle a little bit. We're one day after the FOMC, so it's something to kind of take note of. I just try to point out the key levels, give you my thoughts. It's up to each person, obviously, to take a trade or not, and then if I point out a level and something doesn't act right, and it maybe rallies from that level, then you got to stop out. That's up to every person to kind of take action on the charts. So again, now we're back at the top of the wedge, kind of resistance right here. So we'll see if we sell off. Again, lots of kind of chop going on post FOMC noise. So you could sell off here, and maybe that's the real deal. The major target for the wedge would be the widest part of the wedge. On the breakdown's really about there, but now that you've recovered, I don't know. You could probably take it there and draw some sort of a support line right up in here. Might be the measured target, which is about 14,617 on the NASDAQ futures. One thing you'll want to watch for, though, I think it's critical. You need to see these FANG stocks break, and these are they're all holding support so far. I look at Amazon. We'll just kind of go through it. Well, and I'll just stay on the hourly chart just to kind of show you guys. Amazon holding up trend line support. Google's just kind of flat, but it's holding support level 122.30. It's been just chopping kind of bouncing on that level for for a couple well, really going back for a while, actually, back to May 19th. And then Apple, okay, Apple's just, kind of walking up within this bearish rising wedge right here. You have negative divergence on it, but it's not, there's no sell signal. You're still within this wedge here. So still holding that. And then Meta, same kind of look. You've got on this hourly chart, bearish rising wedge here. You do have the negative divergence, but as I zoom in, you can see they're just holding that support. They're buying. So it's holding that support, and it has not broke. So you have no sell signal there either, even though you have the divergence. Let me flip to the daily on that one. You do have negative divergence on it right there on the daily. You do have a nice, sharp, bearish rising wedge. It's likely going to break with a gap down. I don't think we're going to get an intra-market break. It's probably going to gap down in the, in the after hours or the overnight session in the futures, and then you're going to have a big gap down to wake up to. So, I mean, not necessarily. It could just start to sell off, but I suspect it's going to be in the form of a gap. Microsoft's kind of going parabolic. It's rallying up to the all-time highs right here. Maybe you get the double top right now. Again, with the others still holding support, this is at resistance, but you need to see kind of all these fangs break really all at once would be helpful. So that is that. And then NVIDIA, I've got NVIDIA in here now because it is, a large cap tech stock. And on this hourly chart, really for NVIDIA, just the hourly, I've got this uptrend line, and it's just holding that on the hourly. So no sell signal on that. It is a divergent high, but there's no breakdown. So that's it. You can see on the daily chart, you're starting to build a negative divergence. It's showing up on the hourly a lot cleaner, but there it is. Momentum starting to drop off, but no break, no sell signal. So that's really it when it comes to the FANG stocks and the triple Qs and tech. And kind of the market as a whole, the broad market, S&P 500 is not going to sell off when the heaviest weighted sector in the, in the S&P 500 is still holding support. So we just, at the end of the day, right now the market, you kind of just need to watch these FANG stocks to give you a clue on where the broader market's heading. For me, I continue to sit on the sidelines. I am not long or short triple Qs, just flat. I'll let you guys know when I see the next kind of objective area, either to go long or short. Right now, it's not objective to go. It's not objective to go long. You've got a parabolic move up in the triple Qs. You still have divergence, kind of barely holding on to that on the PPO. The RSI is, it's kind of burned. It's pretty much burned through it a little bit on the RSI on the daily. So it's just not objective though. If I'm going to go long, I'm going to buy at support, which is down here at 347-ish, right in there. Not looking to go long way up here. Okay, some individual stocks I pointed out. This one, CVS. Again, looks like a good buy here. This is something I do want to go long on. This is something I want to buy. I talked about looking to buy dips in this. And we did get the dip this week. So on the daily chart, you have this downtrend line right here. This is a healthcare pharmacy or something. You have a downtrend line. You have bullish divergence on the momentum that's been building. You have a breakout here. That's your initial breakout. Okay. So you could buy on the breakout or on a backtest of support. So this had already broken out by the time I actually saw it. So it wasn't anything I was looking to buy on the breakout way up here, but I did mention in the live session on Saturday that I did want to buy this on a dip, and then sure enough, yesterday it gapped down. They rallied it up initially and then sold it off the rest of the day, pretty much right down into that support line right there. So that was an objective area to go long, especially at the end of the day. And then today, boom, gapping up, and it's running, continuing to bounce off that support up 3.5% or so. Okay, so this one looks good for a long. Some targets that I have. I mean, you've got a pretty good level of resistance right up here. So if this really wants to, catch a bid, 88, right around 88 bucks would be a pretty nice swing trade for sure. It's going to take a little while to get up there, but that would be about 28-30% up there. You have some reaction highs right here, about 77. And then obviously you have the gap from yesterday to fill. So the gap would be the first target, and that would basically be right in about there at 71.20, 71-ish. That'd be my first target. And then those are the levels overhead. Okay, commodities. Really, they're all kind of being bid today. Commodities are all up, mostly. A lot of those commodity ETNs just got retired, so we don't have a lot of them to track as much anymore. You can always look at the futures, but if you don't trade futures, or if you can't trade futures, then kind of out of luck on some of those. Wheat, though, has been the one that has looked, to me, the most bullish recently, because it's really just been selling off price action, coming into this bullish falling wedge while building big bullish divergence for quite a while, almost a year. The divergence started to build. You really started to show divergence actually right in here. Last August started to kind of build that. Now, it didn't give you an indication to necessarily buy, and then obviously we have this large pattern. So this divergence is building off this large pattern, and we're looking for the upside move. On wheat, you can see you broke out, kind of failed, but then boom, last couple days, continuing to break out. So that looks like a breakout to me on the wheat ETN, but there's one caveat on that, which is the futures. We need the futures to run too. So if I flip over to the wheat futures, ZW, I've got this downtrend line to watch right here, multiple reactions, and we're just still stuck there at resistance on that downtrend line. You get this to break out, that would ultimately probably, that would probably be your buy signal if you're waiting to hold off on going long on wheat. So still waiting for that on the futures. Have nice clean bullish divergence. The chart basically looks the same. You just don't have that breakout yet. So once you get that, you're going to have a breakout in the ETN and the futures, and they should run. The major target for this one, for the futures, take the widest part of the wedge basically, which I see is about there, and it's setting us up for a move up to about 932-ish. So that former reaction high would be the target, and that's a nice move, on a swing trade. That would be a move of about 44%. So I like that. I think we're going to get that move. The divergences, the bullish divergences, are telling me that move is coming. Just need to see those futures break out. Again, I am long this one on the ETN on wheat. So, okay, these home builders continue to look like good short setups. Not actionable yet. And again, I'm just going to continue to talk on these, just as a reminder every few days. These look like really good short setups. They're not actionable. I can't take a position. I can't short this, but I do have a nice, clean bearish rising wedge on this DHI. You've got negative divergence. I'm waiting for a breakdown, a sell signal. And then if I look at XHB, here's the home builder ETF. Same kind of look. Negative divergence. Just kind of extending that divergence. Bearish rising wedge at the top of the wedge now. Okay, so that's an objective area to short. I'm going to wait. The market's been pretty resilient. So I'm going to wait, because we could see a kind of a overshoot where it kind of shoots up and then fails. Sometimes you get that when you have a really bullish market. So kind of an exuberant market, really. And so I'm going to wait for the break of trend line support, which would be down here. So yeah, that is, from where we're at now, that's still a drop of about 7.5% or so, just before you can even break. So that's it, waiting for that one. And then gold, really the gold miners, you can see we're pretty much back down to that support level. So you have an uptrend in GDX, you've got support. There's three reactions. Previously didn't quite get there, but getting close enough where the buyers might step in a little early for a fourth reaction right there. And that's an uptrend line. You did just come off a divergent high, okay? So that was a divergent high right there, and you did get a pullback, but we're now at support. So I would think the buyers are probably going to step in and bid this up to, you know, resistance right now is about 33.42. So I'd see a move up there. That's a rally from kind of where we're at. They could go a little lower to hit this trend line exact, but again, my trend lines are sometimes slightly off, so. But maybe a 10, anywhere from like a 10% rally to about a 8 to 10% rally, maybe from where we're at, depending on if it drops just a little bit more. Okay, oil. Haven't talked about oil for a while because it's just been kind of sideways to lower. I mean, obviously in the last few months, and so it's just kind of chopping around, dropping a little lower. But now, as I see on the oil futures, CL, we are starting to show some bullish divergence here on the daily PPO. And let's see if we have it there in the RSI. I mean, it's pretty much there on the RSI as well on the daily chart. So we keep dropping down into kind of making slightly lower lows, but they're divergent lows. And we've got some support, if I can show you guys. Right there, look, you got former reaction high. It's about 66.75, former reaction high. Kind of chopped through it, but it held support through here, held it through there. And then as I kind of get to where we're more recent time, support, you know, and basically holding that level, that 66.50 area. We're down near there, and we have bullish divergence. So starting to look kind of like a bullish setup on that one. Not necessarily a buy signal for sure. You obviously, you know, buying at 67-ish, 66.50 or so, that's support as of right now, but maybe a potential downtrend line that we'll have to build. This might take a little while to kind of shape up, but I'm definitely seeing, you know, some divergences showing up, and it looks like they're holding this support level. So look, you know, we'll start to look for some oil trades potentially, but no buy signal yet. Okay, I pointed this one out the other day, maybe yesterday or the day before. This looks pretty bullish to me too. It's got a nice bullish setup. So on this one, daily chart, this is CF. It's an ag industry. So it goes along in chemicals, fertilizer, whatever they make for the ag industry. You've got a downtrend line, all right, on this daily chart. We have bullish divergence that's been building, you know, for quite a while. Really, you could even say it's been building since back then, to be honest. And so making divergent lows in this downward channel. So the buy signal would be a breakout to the upside of a downtrend. And as you can see right here, that to me looks like a breakout, okay? So as long as they can close the day up here or maybe build on the gains and continue to rally, then that is a bullish breakout of a downtrend line. And you had the bullish divergence, so that's a buy signal. And then you just mark these former reaction highs probably to give you an indication of reaction points. But it would be a buy the dip stock if you get this breakout and it confirms, you know, continues to rally. It looks to me like you're going to buy the dip on this one. Got a couple reactions right in here on that one. Yeah, that's a nice solid level. So that would actually be a decent target for you right there, which would be about 81. And maybe a couple reactions along the way, you know. But ultimately, I would think 81, it'll hit 81 right in there. And the 200 is probably going to hit it at the same time. So from where we're at now, that's a continued rally of another 15% or so upside on that one. So I like that as a bullish, really an actionable trade as of now. Unless they just sell this thing down into the close, it would be a buy signal. And again, you do want to keep an eye out for that. If you want to take it, you know, I think it makes sense. You could go long here, and then if they sell it down into the close, you could, you know, could always get out. You know, I mean, has been a lot of kind of false breakouts and false breakdowns intraday. So you know, that's what it looks like as of right now. Okay, that's really all I have for this morning, or for today. So I'll get this out there. Guys, drop me a thumbs up on your way out. I'll catch you on the next video. Bye.